Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics in the midst of a gold and silver mania. And obviously, we have a lot of mining stock investors in our crowd who have a lot of questions about things that are going on, especially how the current gold price affects the miners and how it could affect them going forward, especially with earnings for the fourth quarter not too far around the corner. So, quite fortunate to be joined by my dear friend Jorge Ganoza, the CEO of Fortuna Mining in what is really a great time to have you here because obviously you've been doing this in the gold and silver space for decades. Also, perhaps some of the things we can discuss in a broad sense, you can actually demonstrate because you just did have the Fortuna production numbers out this morning. So, a lot to talk about. Great to have you back on here. And how are you today, my friend?
I'm well, and thank you for the invitation again, Chris.
Yeah, well, I mean, you're generally a pretty happy guy, although I figured there might be an extra smile on your face. As now we see the gold futures up over 4,600 bucks. That's even with them down $20 today. And here we'll take a look at the 5-year chart. Really, I don't know what else you can say, but stunning what we've seen in the last 2 years. Seems as if you could say it's even accelerated, and love to hear your thoughts on what we've seen in gold and anything that you think people should be paying attention to there.
Chris, we are at Fortuna and myself. We tend to be, as you know, through the years, talking about gold price. We tend to be on the conservative side always with respect to prices. We try to be price agnostic when we think of our business. But this time around, I believe that the fundamentals that have driven gold to where we see it today remain strong. And I think there is a good chance that we just continue see this bull market running on strong. So yeah, in our analysis, in what we gather, uh, yeah, the fundamentals for continued increments in gold, silver price remain strong because the fundamentals are there, right? So we're we work in the gold mining industry for moments like this, and we're certainly benefiting and perhaps an angle that I can bring to the conversation is what is the flip side to this $4,600 gold price. I don't want to ruin the party for anybody bringing the topics of the challenges that this represents, but I think it's something that we should all keep in mind. I don't know if you have done this exercise, Chris, but the last time we saw record gold prices, we have to go back to 1980. In 1980, gold traded at you know it peaked at $800, but the average was around $600 per ounce. But just for the sake of argument, let's use $800. If we adjust for inflation, the $800 of 1980, that works out to be around $3,100 per ounce. I don't know if you've done that exercise. Uh, and so basically, none of us in the industry today have worked in an environment, in a price environment like we are today, right? And that's something to consider. There are all sorts of benefits and challenges that will rise for the miners from these high prices, right?
Yeah, and that's one of the things I'm looking to digging into with you today. And but it's interesting you mentioned how the fundamentals and how that affects things where I get it. And certainly I think there's a lot it's worthwhile to put thought in. We are at an all-time record high, so have a balance to these things yet. Jorge, I'm curious as someone who primarily lives outside the US, what your reaction is when in the span of a couple of days on Sunday night we hear Jerome Powell get it. I mean, he has a message, even the Fed's posting it on Twitter of him responding to a lawsuit and threats from the Trump administration. But what was interesting to me, he didn't just say he disagreed with it. He said, no, this has nothing to do with the Fed building. This is because they didn't lower rates as quickly as possible. Then a couple days later, we have Trump saying that if the Supreme Court were to rule against him, we're screwed. Very scientific phrasing. He even goes as far as to say, that the amount that we would owe is so big that it there we go, the dollars would be so large it would even take years to figure out what number we're even talking about, let alone who pays it. And I might add at the back end of this, we look over here at Polymarket, if we can get this refreshed, there's a 33%, 32% chance of the court ruling in his favor, which means, according to him, there's a 68% chance that we're screwed. And I'm not trying, I understand some people like or don't like what he's doing yet. Just the idea as someone who is investing, you're someone who invested in gold, in mining stocks, and you're seeing the way capital is being allocated, and there's growing concern about what is going to happen with these treasuries. Any thoughts on the treasury environment right now?
You know, what I can say is that we are seeing uncertainty on many, many fronts, and this just being one of them. You see, I am not gonna discuss if the tariffs are good, if the tariffs are bad, if you know the this challenge to Mr. Powell is warranted or not. Uh, but what I can say is the factual observation that all of these things bring uncertainty and more uncertainty. And that is what's driving the price of gold. The discussion around Greenland. Uh, I am sure that the US has legitimate arguments. The US government has legitimate arguments why they believe that for the national security. But it's uncertainty. We're in a period of uncertainty, and so there is mounting uncertainty on many fronts, and that is one big reason why gold price continues climbing and climbing. And you know, so uncertainties on the economic front, on the geopolitical, like I don't think we've seen in a long time. So gold price is just reflecting those uncertainties. And as time advances, I'm sure a lot of those uncertainties will be, cleared out. And but for the near future, midterm, I think we still have some digestion to do with all of these initiatives that are being launched or situations that are being contested in so many fronts, right? Yeah, I believe uncertainty around so many fronts is one of the fundamental reasons why gold is behaving as it is, and that will persist at least for now. So we are actually we have become extremely bullish, just like most everybody on gold. Oh, yeah.
Yeah, I know what you mean. And going forward, it makes you wonder, especially as we're seeing resource wars break out and issues where can the US get parts and things that they need, which makes me feeling that there's a good chance 10 years from now we're looking at a higher gold price than lower, but we'll leave that aside. And perhaps you could just explain for people if they're, especially with many people new to the mining stock industry, something we talk about a lot on here is all right with where the miners are trading now and where gold is trading now. Are they still undervalued, or have they gotten fairly valued? Anything in terms of setting a framework of how people would want to be looking at this right now?
Yes, we are where we provide leverage in general terms to gold price, right? So as an investor, uh, you first need to take a position on gold price. And again, in our view, gold has a lot of room to continue moving upwards. Uh, Second, miners are seeing margins on ASIC, no, on all-in sustaining costs that are anywhere between $2,500 per ounce, $3,000 per ounce. The mines currently on the median of cost are seeing those kind of margins. Even the margins, when we look at financials, are traveling at around 60, 70%, 75% at the asset level. So, what is the flip side to that? The uptick in price has been very violent, and a concern we have is that the structural bottlenecks in our industry, people, supply chain for specialized equipment, certain consumables, we're going to see stress start to build up on those supply chains, on those pools of talent. And what that means, for example, with the pool of talent is you don't have the expertise, the experience to deliver the projects on time and budget, to support the operations with the required level of excellence, to deliver on guidance. So retaining a lot of the talent will demand retention bonuses and higher pay because there is a limited pool of capital and everybody underdog wants to build a gold mine now. So, you know, uh, so a lot of inflation pressure there, risks emerging from not having the necessary experience across the pool of projects being developed and the same thing with supply chain, right? Delivery times for SAG mills, delivery time for crusher, delivery time for big trucks, for underground equipment. All of those will probably start getting stressed. We interact a lot with our supply chain, and we already, for example, on the side of engineering firms, are clearly seeing an uptick in studies, right? Engineering firms are getting more demand for feasibility studies, PEAs, pre-feasibility studies, all of that work, expansion studies. So what follows? After the study, you start building, right? So we're seeing already the ocean retreating, if we think of a tsunami with the uptick in studies, right? So that means pressure on the margins. That means higher cost inflation, and pressure on margins. No? So I think a key to watch is how companies manage to sustain the high margins we're currently seeing and keep ahead. Yeah.
Yeah, which actually works in perfectly to the next question here because you just had your production numbers out where you came in with annual within the annual guidance and also everything you just spoke about of how do you balance this while dealing with inflation and all these other variables that came in. For anyone who is new to Fortuna, I'll mention that you built the Séguéla mine in the middle of the last inflation wave in 2021 and 2022. And with that context, perhaps you could just give us a rundown of how things came out here in the fourth quarter.
Well, we achieved guidance. That's paramount to us. We had our challenges through the year, and we were able to overcome them, capture opportunities as well, and we delivered within guidance 370,000 ounces of gold for the year. Our production for the quarter was somewhat below what we produced in the previous quarter and a year ago, mainly driven by downtime at the crushing circuit at our Lindero mine in Argentina. Those issues were contained within the quarter and resolved, and the system is, up and running again after 12, 14 days of stoppage. But no, all in all, a good year. But the big story for us is with the outlook, because we have a very strong organic growth pipeline. We have two paramount projects for the company. One is the construction decision of our Diamba Sud project, which we are quite sure that we'll be making a positive decision and full investment decision by mid-year. We are well advanced with our permits, and we are so encouraged by the strong economics of the study, the PEA, preliminary economic assessment we delivered last year, that we have this year allocated a $100 million budget to advance Diamba Sud. Diamba Sud is a project that at $2,750, that's the price we used in the study, yields an internal rate of return of 72%. The payback on the project is a few months. So it's a project of robust economics at 2,750. I don't even want to plug $4,600 into that financial model because what number are we gonna get? But right, so we have this year committed $100 million. The bulk of that, over 50% of that, is ticketed towards early works. Start with critical excavations, advancing the camp for the construction and eventual operation, all of that work that will set us up to de-risk our timeline as we make the construction decision by the end of the second quarter.
Yeah,
The
and just
formal construction decision, but we already committed $100 million this year. Yeah.
okay, and just to make sure two parts of that are clear, again, the gold price will do what the gold price does. But what we can take away from here, and I know you and I talked about this last time, but this was baked in with a $2,750 gold price. So the economics, again, you make the construction decision when you do, but should we have the higher gold price, especially for people that are looking at the mining stocks, particularly to get leverage, you found estimates that conservatively it's profitable at 2,750, let alone 4,600.
Yeah, no, the profitability of this project has always been extremely high, as shown here in the PEA. And for the benefit of your audience, we published this PEA this past month of October. And right now, we're working on several fronts here. We are working to migrate this preliminary economic assessment into a full feasibility study. We expect to have that delivered by late in the second quarter. At the same time, we're working on getting our environmental statement approval and exploitation permit, right? We expect to get that in the first half of 2026, this coming months. And as we advance with all of that, we have budgeted $100 million to initiate excavations and things under the current permits that we have, so we can advance critical activities that will help de-risk the timeline of the project for when we make a construction decision, a formal construction decision, right?
Okay. Yeah, and I appreciate you mentioning that again with the money that you've invested. We'll get the decision when the decision is made, but it sounds like there has not been anything coming up that has gone contrary to plan that creates a new obstacle. It seems like things are relatively on track.
This project is in Senegal, in eastern Senegal, and we're getting a lot of support from the Senegalese government. I have met with the president. I meet regularly with the Minister of Mines. We're getting great support. We already went through the public consultation process with the nearby community, and we got overwhelming support for the project. That's an integral part of the environmental approval process. So we went successfully through that community consultation, town halls, and late last year. So we were, yeah, the engineering is well advanced, and we're breaking ground with the camp. We're gonna start breaking ground probably in February, March, with initial excavations for the water storage facility and things like that. So the government is providing the necessary permits for us to carry those excavations. So all in all, I think we're yeah, looking at a project that's solid and financially de-risked as well. And that's important to say. Fortuna has one of the better balance sheets in the peer group of mid-sized miners. And so, this will be eventually a build in the 250 to $300 million range when we finish the feasibility study. That's our expectation. And that we can comfortably fund that internally from our treasury and cash flows, right? Yeah.
Okay. And now, Jorge, I don't know if you thought you were going to sneak this line in here past me, and I wasn't going to have to bring this one up. But I mean, last year you wound down San Jose and Yaramoko, and there were some people concerned, well, we're going to have less overall production. And you explained that the reason you were doing that was that you have options. So you may have a lot of production here, but what if you can get similar production at a lower price elsewhere? And speaking of that, you mentioned here during the first 3 years of production, Diamba Sud is projected to deliver an average of 147,000 ounces of gold at an all-in sustaining cost of $904 per ounce. I'd love to hear a little more on that one.
Yes. In 2024, Fortuna delivered 460,000 ounces of gold. So in 2025, the number has dropped to 317,000, as we just discussed in the production we reported today. And so there is a drop in production. But what did we do? We had two mines, San Jose in Mexico and Yaramoko in Burkina Faso, that were running short on reserves. So they were yielding metal output, but they were short on reserves and about to go into mine closure processes. So we made the decision to streamline the portfolio, sell those assets, and this is important for your audience. A mine closure is a complex project that takes years, it's a multi-year project, and like any project, it demands a lot of management attention and capital as well. So we identified the opportunity, benefiting from this high price environment, to sell those assets. So we sold them. We sold the Yaramoko mine for $70 million. We sold the San Jose mine for a smaller amount, but we got rid of $30 million of mine closure at each of those sites. Probably $60 million in mine closure on aggregate over a number of years. So we materialized those sales in 2025. Naturally, our production has dropped, but we're comfortable with that because in the pipeline, we have projects like Diamba Sud coming in. Diamba Sud is a better strategic fit today, and that's where we want to focus management's attention and our capital rather than in mine closures. No, this is where we want to focus. A project with, today, an internal rate of return in excess of 100% if you plug in $4,600. And with prospects to having a mine with very robust economics, with a life of mine akin to 10 years, a decade. So that's what we're targeting here, right? So we were willing to take a hit in the short term, losing those ounces in 2025 from the sale of these two mines because we have coming this new generation of projects for the company. One is the Diamba Sud, and the other one is the expansion of our Séguéla mine in the Ivory Coast. So those two projects are key to take us back up to the north of 500,000 ounces of production. But importantly, ounces that come from mines where we can project life of mines for over a decade and with low cost. As you've seen, Diamba Sud is projected to operate with AISCs of sub $1,000 at the time of the study. I expect that with this inflation, AISC will be higher. That's an expectation, but higher to what? $1,200, $1,300, $1,400 per ounce, perhaps? Go crazy. That's still what? $3,000 margin at today's spot prices, right? Over $3,000 margin on AISC. So projects with very strong economics, and these are low risk projects for Fortuna. These are projects that we own them. They are technically very simple, sweet metallurgy. No, they are very amenable to conventional metallurgy, very conventional open pits in good jurisdictions in West Africa. We're getting our expectation is that we will get the environmental approval in 6 months for the Diamba Sud. Where in the world can you do that, right? I mean, these are governments that are working hand on hand with us in streamlining the process. There's not a lot of bureaucracy, any red tape in the process. No, we're feeling very good about this.
Yeah, it's a great point, and perhaps you could touch on that a little more in terms of low risk, because especially for people who are newer to the mining stock, sometimes you see, wow, these guys have a great deposit, but you don't factor in all of the steps of things that could go wrong in the process of getting there, which is more relevant today perhaps than ever.
Yeah, when we discuss risk, uh, certainly, being in West Africa to some, particularly North American investors, raises some eyebrows, questions. But from our perspective, Chris, risk for us, for example, taking a decade or 5 years to permit a project poses a risk as well, right? So in our risk equation, uh, effectiveness, efficiency in the permitting process is something we consider. So certainly West African countries are young democracies, developing nations with their own set of challenges, but they are all vested in the development of a successful, responsible mining industry. So from that perspective, in our risk assessment, that's a place where we want to be. No, a place where it doesn't take a lifetime to develop a project. It takes 6 months to permit, right?
Yep. And speaking of which, you touched on this a little bit earlier, the processing plant expansion feasibility study at Séguéla, which I think on some level speaks to what you're saying earlier about increasing the annual production again, as you have several steps underway to facilitate that, of which this is one. And perhaps you could just walk through what you're doing there and what that will allow you to do if you go ahead with that as well.
Our objective is to take Séguéla to 200,000 ounces of gold annually. No, that is our aim. Séguéla, it's only on its second full year of production, right? And it's been growing incrementally every year. 2024, if memory doesn't fail me, we delivered 147,000 ounces. This year, we delivered 152, and we want to make that leap to 200,000 ounces of annual production. We believe we can achieve that. We have the resources to do that, the reserves to do that, the exploration potential to still see a decade in life of mine at this high production rate. So we're trying to bring all of this together with the studies this year, right? And another low risk growth opportunity in our portfolio.
Yeah, and certainly a big part of that is going to be related to Sunbird, where I will find that in the press release, but I see you have a couple steps moving forward there as well, which I know you've been telling us and explaining how that's, I don't know if you pick favorites among the different fits, but certainly has the potential to be one of the bigger ones.
No, Sunbird is already the largest resource in the Séguéla complex. We have six mineral deposits with reserves, and Séguéla is the largest one. And bear in mind that 2.5 years ago, Séguéla didn't, sorry, Sunbird, I'm talking about Sunbird. Sunbird didn't exist. So it's really been a tremendous exploration success story for us at Séguéla. And right, Sunbird continues open, mineralization at Sunbird continues open at depth. And we went initially from the discovery to outlining a open pit resource. And as mineralization remain open, we continue pursuing the deep extent of mineralization. And we have built a sizable underground resource that continues growing as mineralization remains open, as I explained. And right now we are finalizing our underground mining plan, and we look forward to publish the outcome of that study in the coming couple of weeks, I would say. No, in the coming couple of weeks, we should be sharing with the market the outcome of that study, which is pivotal to support our ambition of higher production.
Yeah, and I saw you also had allocated 14 million to the development of underground infrastructure there and also 55 million towards exploration as well.
Yes, $55 million is allocated to our worldwide exploration initiatives, and 14 million is for the Sunbird underground at the Séguéla mine. So we're gonna initiate with the underground access and a lot of those activities. Yeah.
Okay, and you guys also had news out last week, which some people saw, and for anyone who didn't, that you had another round of share buybacks. And this is the second year in a row that you've done this. And one of the first things that popped to my mind is I remember last year when you were doing this, and I looked up, I'm like, I think the price was around $4 or so. Obviously, this round of share buybacks done at $10.01. Obviously, anytime, especially in the mining sector, there's any sort of changes in capital structure, people pay close attention to that. But perhaps you could talk about these two rounds of share buybacks.
Yes, basically what we have done internally is updated our outlook, long-term outlook, bringing into consideration into the value of the company these growth opportunities we just discussed. And we have also updated our price scenarios, as we just discussed. We're a bit more bullish than we traditionally been. And based on that is that we decided to relaunch our share buyback program. We believe the shares in those price ranges still offer a healthy return. So it's not just when we purchase shares, we do it with discipline, right? So we take a position on prices, of course. We have, as I said, become a bit more aggressive with review on prices than before. And also we have factored in our growth prospects, basically Diamba Sud and Séguéla expansion. And based on the outcome of that internal assessment, we have decided to reinitiate our share buyback program.
Yeah, and it actually comes back to what we've talked previously about how you have this record liquidity position, which last count was over $500 million, and people have been wondering what you're going to do with it. And you've actually outlined, you've had Diamba Sud, the expansion at Séguéla, and the share buybacks are the three primary things you've been doing so far.
Return to shareholders, where can we identify a project with a 72% internal rate of return? No, I mean, that's the best return on money we can find. So we're allocating a lot of capital towards that. We're being aggressive. Séguéla expansion, the underground scenario, the success we had with exploration. So, we anticipate the return on any investment we do to go underground and increase gold production is going to have also the opportunity for strong returns. So we're allocating capital to that. We are very bullish also on the exploration potential of our properties. We're allocating $55 million to those initiatives. We've been harvesting additional ounces every year for the last 2, 3 years. That's been accelerated, particularly over the last year. So we're allocating $55 million towards it. So, you know, we are comfortable that we are allocating capital to initiatives that provide strong returns for the company. No,
Oh,
by far above market returns. So then our second priority is the share buyback program, which is a means to, return to shareholders. And we have updated, as I just explained, our internal assessments with higher prices and the growth opportunities we see. And based on that, we're returning to capital to shareholders through the buybacks, right? So basically, that's where capital is going. And we believe that mining companies should be run with fortress balance sheets. And we have one of the better balance sheets in our peer group, no? So we will protect that balance sheet and leverage it for the benefit of the company and its shareholders. Yeah.
that makes sense. And I know one of the questions you often get is, all right, with the liquidity, are you looking at an acquisition? If you have a comment on that, you can share that. Although, even aside from that, I'm wondering how does the acquisition market change when you have $90 silver and $4,600 gold? Does it become easier or harder to find a worthwhile project? How does that work?
Well, there is increased competition for sure. Now, we have more competition from Chinese companies than, let's say, some years ago, right? Let's say a decade ago, 5 years ago. We have seen competition from Chinese companies, particularly in the gold, in the copper market for some time. But now more and more we see stronger competition from Chinese companies on the gold market, right? So that's one. And then, as valuations increase, if it's a share transaction, it all becomes relative, right? If it's a share transaction, if companies use their equity to make the acquisition, a lot of it depends on relative valuation, of course. But things are getting pricey, no doubt. No doubt. And again, also a lot has to do with what is your ultimate view on gold price, right?
Yeah.
And the ability of gold price to stay high for longer periods of time, right? Mining projects go on for, a decade, 2 decades, right? So in the gold sector in particular, copper projects tend to be, transgenerational, but gold projects usually are 10, 20-year projects for the most part, not all. Right?
Yeah, well, I appreciate you mentioning that because especially when the prices are soaring, understandably, it gets very easy to get kind of exuberant and, oh, well, it's the 95 today, it'll be
Eh,
120
yeah,
tomorrow,
no,
which,
no, no. And you see, in any market, not just in the gold market, but in any market, when we see this kind of exuberance, to use your word, people just easily get detached from fundamentals, easily. And there is a day of reckoning, right? So keeping discipline is hard and risky sometimes. So we try to keep disciplined and but yeah, absolutely. As prices start climbing and climbing and climbing, yeah, we can look at deals in previous cycles that people eventually regret, right? So for us, it's not chasing the ounces because that's just playing the or trading the gold price, and we cannot trade the gold price. You guys, as an investor, can, but as a mining company, we don't trade the gold price. So we cannot chase ounces. We need to be focused on value, right? So that's very important. In Fortuna, we don't chase ounces. We chase value, right? So because if you're chasing ounces, it becomes a trade on gold. And as a mining company, we cannot, I don't believe we should be trading on gold. That's for traders to do, no? Guys who can come in, come out, but we need to operate the mines throughout the precious metals price cycle. And for that, you really need to be really focused on value to do it
yeah.
successfully.
Well, I really appreciate you mentioning that because, yeah, if someone wants to bet on the gold price going up is one thing, but if it does go down, it's a little bit of a problem if it's like, well, if the gold just goes straight up from here, we're good to go. But if it goes down to 4,000, we're out of business. And I might add, not just something that you're saying, but for the last 50 minutes or so here, you've been describing how you've done that. And here, rather than chasing and you took that period where you had lower annual production, but now you're looking at 147,000 ounces of gold at an all-in sustaining cost of
A
904.
lot of value. And that's a project we acquired in 2023, before it was really fashionable to talk about gold, right? Not that long ago. This is a project we acquired in 2023, Diamba Sud. And, it's taking a couple of years to get it to where it is, but we are unlocking a lot of value here and tremendous value. So yeah, we were not chasing ounces, we were chasing value, and we'll try to remain as disciplined as we can on that. Yeah, yeah.
Alrighty, and then I think the last one I have for you here is just if you could give us an update on the cost structure going forward. I saw down here expected to be 1830 to 1975, a slight increase, and obviously that's one of the key things is how costs evolve over time. So anything you could share about that?
Yes, our ASIC. First, I would like to take a quick look at our cash cost,
Okay.
right? Uh, if we look at our cash cost, we are operating the mines with a cash cost per ounce, per gold ounce, of around $1,000, right? At our open pit mines, we capitalize a lot of the stripping, so that comes into the ASIC equation, no? Sustaining capital. So then, for the benefit of your audience, as gold prices climb, the impact of the royalties we pay to governments also climbs, and our ASIC does carry government royalties in it, right? So the $1,800 ASIC, $1,850 ASIC carries the weight of the royalties and the capitalized stripping and a lot of that. So, our expectation is that ASIC will start to gravitate as we advance a lot of these initiatives, bringing Diamba Sud, which is a really low-cost project, expanding the Séguéla mine. Lindero is already achieving very low costs. We expect Lindero costs to start high in the first quarter of the year and then decline throughout the year as the initial capital projects are more front-end loaded in the year. So we expect to finish the year at Lindero with ASICs in the range of $1,300-$1,400 per ounce. So, I think we're in a good spot, particularly because expectation is that those ASICs will gradually decline as we materialize all of these capital projects that we just discussed through the call.
Well, I appreciate that and sounds like a good position to be in, and also helpful as you explain with the royalties where there's some variable, whereas the price rises higher, that's
Or ASIC,
good.
or ASIC, for the benefit of your audience, we use the guidelines of the World Gold Council to estimate or consolidated ASIC. So the ASIC that you see that we report in our outlook for 2026 is a consolidated ASIC, and it carries all of our corporate expenses, royalties, no, the impact of share-based payments, right? So a lot of that is reflected in that consolidated ASIC. So we expect in the coming 12, 24 months, we start seeing that consolidated ASIC gravitate towards a lower place as we materialize all of these capital and expansion projects.
Well, that certainly makes sense. And perhaps we'll just add here that if people have questions about that or anything else that we discussed today, or otherwise about Fortuna, you can find Fortuna at fortunamining.com. And there is the contact tab here. And I have a fondness for your investor relations expert, Carlos Baca, but you can message him here at info@fmcmail.com. And Jorge, congratulations on another strong quarter. And do we have a date yet for earnings release?
We're going to release earlier than usual this year. The expectation is mid-February, third week of February.
Okay, well, I'm going to try and not get myself in trouble saying this, but I'll have a few bucks in my option account ready in case our earnings short seller reappears. We won't be too mean, although here the price is a bit higher than when he tried shorting after the last earnings. That seemed a little odd at the time, but I guess that's part of the marketplace. And yeah, it'll be great to see that come out, and hopefully we'll have you back on here then to go through the results.
Perfect. Thank you, Chris.
All right, thank you. And thank you to everyone watching at home. It was fun to talk some gold and Fortuna today, and we will check in with you again later.